How are IRA distributions reported on Form 1099 are taxed? Have you ever wondered how distributions from your individual retirement account are taxed? Understanding this can help you plan better for your retirement. When you take money out of your individual retirement account, the details are reported on a specific form known as Form 1099-R. This form is essential for both you and the Internal Revenue Service. It shows the total amount you withdrew during the tax year, any taxes that were withheld, and a special code that explains the type of distribution. Now, let's break down how these distributions are taxed based on the type of individual retirement account you have. If you have a traditional individual retirement account, the money you take out is usually taxed as ordinary income. This means that if you contributed money to your account before taxes, you will pay taxes on those funds when you withdraw them. However, if you made after-tax contributions, only the earnings from those contributions are taxable. The money you put in after taxes is not taxed again when you take it out. On the other hand, if you have a Roth individual retirement account, things can be a bit different. Distributions from a Roth individual retirement account can be tax-free if they meet certain conditions. For a distribution to be qualified, your account must have been open for at least 5 years, and you must be at least 59.5 years old when you take the money out. There are also exceptions for situations like disability, death, or a first-time home purchase. If you withdraw money from your individual retirement account before you reach 59.5 years old, you might face an additional 10% tax penalty on top of the regular income tax. However, there are exceptions to this rule, such as if you are disabled or have certain medical expenses. If you decide to convert your traditional individual retirement account to a Roth individual retirement account, that amount will also be reported on Form 1099-R and is generally taxable in the year you make the conversion. Form 1099-R includes a distribution code in Box 7 that indicates the type of distribution you received. For example, if you see Code 1, it means you took an early distribution and may owe a penalty. If you see Code 7, it indicates a normal distribution after you turned 59.5. Any federal income tax that was withheld from your distribution will also be reported on this form. You will need to include this information when you file your tax return. It is essential to report all distributions shown on Form 1099-R accurately. Not doing so can lead to notices from the Internal Revenue Service about additional taxes, penalties, and interest. In summary, how your individual retirement account distributions are taxed depends on the type of account you have, the nature of the distribution, your age, and whether any exceptions apply. Traditional individual retirement account withdrawals are generally taxed as ordinary income, while Roth individual retirement account withdrawals may be tax-free if they meet specific criteria. Understanding these rules can help you make informed decisions about your retirement planning.